Hello, everybody. Hello, 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 hello. Happy Tuesday. Can everybody see and hear me okay? I'm hoping. Hello, Gene. Cubbies. Yeah, let's go, Cubbies. Love that. Love that. Love that. Let's go. All right. Well, kind of a slow day today. You got Powell, who has been speaking or spoke already, and quite frankly, he sounded kind of hawkish to me. In terms of rates not really moving anywhere, and the market is really held in pretty strong. We'll see if that continues. I don't know about that. I know you guys are all getting ahead. You're all getting ahead of the Cubbies today. Haven't even put that out, but nicely done. Nicely done. So yeah, he I don't know how many of you heard him, but boy, did he sounded kind of a little defeated, maybe. Um, but like I said, the market is really hanging in there on that. So we'll have to see what happens. But today is really kind of a wait and see, a pause up until or up ahead of tomorrow's CPI report. And we go through these reports, this eco data that we love to see, that we know really affects the marketplace. But a lot of times, we see the headline, or we see what exactly CPI, PCE, GDP, and we know it can affect things, but we don't really know exactly what it is. So today we are going to go right into our market minds today of consumer price index. There we go. All right. And that is tomorrow morning. We have PPI, producer price index, Thursday morning. Tomorrow is really going to be a pretty big number. And the market can move a lot on that number. Now, in general, before we go into CPI, okay, in general, what the market is looking for right now is data that shows inflation is back under control. We haven't seen that recently. We had a nice, 3, 4, 5 months towards the end of last year or so where inflation was coming down, and then that kind of stagnated and is actually ticking up a little bit. That is not what the markets want to see. That is not what the Fed wants to see. Unfortunately, the reality of the situation is that, yes, inflation is ticking up. And quite frankly, if this whole tariff situation widens out, actually gets enacted, that is going to make things worse. That is going to make inflation tick up further. Now, thank you very much, RDB. Before I move on here, I need 20 likes. I need 20 smashes on the like button before I move on. Can we get that? Guillermo, how are you, man? Okay, Mike Clark, let me know when we have 20 likes. Otherwise, I am not moving on. Come on, guys. Takes you a 27. Boom, let's go. Okay, what is CPI? Why is it so important? The Fed, to all of us, the consumers, and to the markets. Okay, CPI is the Consumer Price Index. Consumer Price Index. What is it? It's a data point. It's a measure of the average change over time. And typically we look month to month, quarter to quarter, year over year. It's a change over time in the prices that we pay for different goods and services. Okay. It really measures inflation on our day to day living. And the things that the Fed looks at, okay, the buckets that they're looking at: food and beverage, housing, apparel, transportation, medical care, recreation, education, communication, other goods and services. So they're really taking in a huge basket of the things that we spend our money on. Now, they are weighted differently, and we're going to go into that. Okay. So we're going to go into that. But really, every pocket, every corner of our life, what we're spending money on is considered here. Okay. So the change in these price of goods, they affect all of us. Okay. Whether we're purchasing milk or eggs, and RDB, yeah, we all know about that right now, or we're buying a big ticket item, a car, a house, whatever it might be. Okay. So this data, CPI, is really one of the few releases that directly applies to our daily cost of living. Okay, now I just talked about the different groups that CPI encompasses. Here's what makes up that CPI data. And you can see the top two things here, shelter being the top. Shelter's your housing. Okay. But if we take shelter and food, that's over half of CPI. So if we think about it, okay, what has happened over the last month, not even just the last quarter, the last year, what has happened over the last month to shelter prices and to food prices? I mean, I don't know an exact number. Not sure, you guys do, but I think we could all probably assume those prices have gone up. Energy's probably come down a little bit. Okay, so I would think they've gone up, which suggests to me we may see. I don't know. We may see a hot CPI number. In fact, Goldman Sachs came out this morning and they said they expect a hotter than expected CPI number. When I say hotter? What does that mean? Hotter means, let's say the expectation was 2.5%. Hotter would be 2.7, 2.8, 3%. Cooler would be lower than. Hotter is higher than, cooler, lower than. Okay, so this is what is incorporated into CPI. Now, if we look at a graph of CPI over the last basically 20 years, we can see actually it's been pretty flat, for the most part. Now, the difference of the two colors on the graph here is this green is encompassing all of those sectors, all of those buckets that we just talked about. Okay. The blue line, which is much more stable, okay, that's called the core CPI, the core number. And what that core number does, it pulls out food and energy, because those are typically the two most volatile components of what makes up CPI. And those can really change very quickly month to month, where you see a lot of diversion. So if you pull those out, you get a little bit more stable of a number, okay, which is reflective here. Now, what happened right here, everybody? Big spikes we see there. What happened right there? This is revised numbers, Bear. Yeah, that's when the pandemic hit, right? Green new scam. I'm not sure what that means, Stephen, but yes, this was the pandemic here, where we saw inflation just absolutely go through the roof, probably the highest point in many of our lives. Not for me, maybe not for some of you who lived through the 70s, but What caused that? We've discussed this before. What caused those prices rising? Well, guys, come on, stop with the politics. This is not about politics. All right? What caused this? Spending money, right? We couldn't spend money. Stephen, I don't just, you got to stop. You got to stop. Okay. This was caused, excuse me. Here's my drawing tool. There we go. This was caused by us spending money that we couldn't spend over here. Now, whether that was because everyone got stimulus checks, an infusion of dollars, whatever it was, that was this right here. And that's the difficulty that the Fed has had over the last several years, bringing back inflation back down to their target of 2%. We were on a pretty good track here, like I said, over the last several months, the last quarter or two. We were on a really good track. And now, if you look, all items here have been ticking up again. Hang on one second. I gotta help my dog here. Come on, go. There you go. All right. Absolutely. Absolutely, Bobby. And that's why the Fed had been raising rates, because they wanted people to start pulling back a little bit. It was all that cheap money everybody got and accumulated in 2020, 2021. We couldn't spend it, and it shocked the system. So what does the Fed do when they want to slow things down? They raise rates. What do they want to, what do they do when they want to accelerate the economy? They lower rates. All right. So CPI is tomorrow, Consumer Price Index. PPI, which is kind of, it's just as closely watched, but typically doesn't have as great of an impact to the market as CPI does. Okay. But PPI will be out Thursday. And PPI measures inflation from the perspective of producers. Okay. So PPI measures the cost of producing consumer goods. Okay. So if you think about it, if all of the inputs, all of the raw commodities, all of the prices are getting more expensive for producers as well, that typically will flow down to the consumer as well. That's why PPI is more of an indicator, a forward-looking indicator. CPI is a little bit in the rear view mirror. Okay, but they are both considered really, really important, really key data releases. And the reason being is not only because obviously it affects our own pocketbooks, but it really directly affects the Fed's outlook. All right, you guys all knew. I promised you yesterday what it was going to be. So the Hulkster is all about the Cubbies this year. Let's get after it. Spring training is here, folks. I'm going to let you guys have a minute here to get that up there, and I am not going back to my slides until we have at least 40 smashes and 40 likes. So Mike Clark, please let me know what we got going here. 41. All right. There we go. Let's get back here. Okay. So we talked about PPI. Now, again, CPI. What is it? Okay. I always like to understand these things, not just say, oh man, CPI was hotter than expected, lower than expected. So this is what to expect. Okay. It is an indicator of how the economy is doing. It's an inflation barometer. Now, what is important, okay, what is really important is kind of knowing the benchmark. And the benchmark for the Fed over time, which I believe still they are going to change that benchmark sooner rather than later, but they target a 2% annual inflation rate. 2% to them is their kind of normal, their median, their range here, which is the balance between businesses and consumers spending, saving, borrowing, and investing. They're not spending too much. It's like Goldilocks and the three bears, mama bear, papa bear, and baby bear. 2% to them is like baby bear, where it's just right, just enough spending to push the economy along, and there's just enough saving. Prices rise really quickly, like we have seen, it means the economy's overheated. So think about it. There's either too much demand or too little supply, right? Everything comes down to basic economic principles of supply and demand. So if people are spending, okay, if they are spending, that's because of one of two things. Either low supply or high demand. And that's what's happened recently. Okay, and like I showed you in that previous chart there, that's where we saw when we were all spending money coming out of the pandemic here, and we saw CPI hit 9% 2.5 years ago, back in the summer of 2022. Okay, and then the opposite is true. When inflation is coming down, it means just the opposite. The economy is weak. There's either too little demand or too much supply. Think about it, guys. Just, think about your own experiences during COVID. Right? I mean, that is the perfect example of supply and demand. Okay? So, we get the number. Okay? I think the number for tomorrow expected is 2.6%. Okay, we'll see what it is. But how is it actually used on a day-to-day basis? Why does it matter? Okay, well, yeah, the government uses it as a benchmark to adjust Social Security, pension payments, and it's the barometer for cost of living adjustments. Okay, businesses use it to consider how to price things, right? Is the consumer, demanding things and businesses can then set prices higher, or is there a little bit of a pullback? People are getting more cautious and they have to lower prices. And then the big thing for the Fed, right? We know the Fed is so focused on the employment situation right now. Okay, so the employment situation, and employers use CPI to help us figure out, do we need to change salary structure, right? Do we need to adjust salaries to keep pace with or even ahead of the cost of living? Okay, if on average, again, the benchmark, and I'm not saying this is the average, but on average, okay, the Fed wants this at 2%. Your wages should be rising 2+ or more percent a year to adjust for cost of living. So another one of those barometers, another one of those eco data points that comes out all the time is a wage price index. And what is that measuring? It's measuring how are wages compared to inflation. Inflation wouldn't necessarily be such a bad thing if it was 7, 8, 9, 10%. If your salary was going up 10, 11, 12, 13% per year. Okay. But that was the big conundrum of what happened over the last several years when inflation was going up. Wages were not keeping up. Wage increase was not keeping up with the pace of inflation. Does that make sense to everybody? I mean, I don't want to pay more, but if I have to pay more for something, but I'm making more, my wages are more than the price increases of the products that I am paying, so be it. That is the balance. That is the holy grail the Fed is looking for. That is the baby bear situation they are looking for. All right. Are we, how many are we up to, Mike? 50? Can we get 50 in the house, a 5 handle? Smashing those likes. 38. 48. Okay, come on. We need 2 more because we're going to close this up pretty soon. We're going to go to the wheel here. Last chance for Cubbies up there, guys. Last chance for Cubbies. And no, that is not a cubby where you would hang your coats or anything. There we go. Boom. Okay. You got a minute left for Cubbies. Okay. And what I want to do here, guys, is I want to show you implied volatility. Oh, come on, Bear. That was a dagger to the heart right there. Oh, my goodness. That was a dagger to the heart. That was pretty good. That was pretty good. Let me go to a different screen here, guys, for a sec. Okay. There we go. So what I want to show you is implied volatility is not really priced in with a big pop for tomorrow's CPI report. So how do we look at that? How do we measure that? I'm just going to look at the money here in the SPY. So if we look at the money implied vol, we're right around 16 to 17% in the S&Ps. And if we just go out to the end of the week, okay, it's relatively unchanged. So to me, again, just looking at this is just my opinion. Okay. The market is not really, maybe the market is not really too concerned about tomorrow's number. Because typically going into a big eco data point like this, we would see a pretty decent discrepancy in implied vol, almost like going into an earnings report. Not really seeing that for tomorrow. So we'll see. We'll see what happens there. All right. The wheel is officially closed now. Let me get the completed wheel here. All right. Let's come on, boys and girls in the background here. My dogs, you can don't have to be that loud. All right, everybody see the wheel? Tariff stuff is definitely grabbing all the attention, Bobby. There's no question about that. All right, in the world. Here we go. Here we go today. Are we going to have Guillermo, Gus, John, Karen? It's close. God, I think you won last week also, right? And Bear, I would expect that. Yes. Bear, I would definitely expect that. John, you two in a row. All right. Nicely done. Nicely done. You know what to do. I know I have your data from last time, but shoot me another email, please, so I don't mess it up. All right, guys. Have a great rest of the day today. We'll see what that CPI number is tomorrow. And we'll see you tomorrow afternoon. Thanks, everybody. Have a good one.